Welcome to Biz Wire. I'm Joseph Nordstrom in Beijing. A senior official from Sri Lanka says his country and China will finalize a free trade agreement by this November. Sri Lanka's $3.7 billion garment manufacturing industry is said to feature strongly in such a deal. Sri Lanka already has a free trade agreement with India and Pakistan and is hoping that a new trade pact with China will breathe life into its $59 billion economy after a 26-year-long civil war ended in 2009. If the free trade deal materializes, all textile products from Sri Lanka would be exempt from tariffs, which currently range from 14% to 25%, depending on the product type. Under a previous preferential trade agreement between 8 countries in the Asia-Pacific region, garment products from Sri Lanka enjoyed a discount of 3% to 5%. Sri Lanka, whose earnings from garments account for half of its entire industrial output, has long been a manufacturing hub for upmarket lingerie, t-shirts, and blouses. The country is the largest supplier for Victoria's Secret and an important manufacturing hub for Gap, Marks & Spencer, and other European brands. Sri Lanka has a population of about 20 million and whose economy grew 7% in the second quarter, which is looking to China for investment in infrastructure that had been neglected for decades. Chinese companies, both state-owned and private, have spent billions of dollars building power plants, ports, and highways in Sri Lanka. For example, a container terminal built and majority-owned by the state-backed China Merchants Holding was launched last month, aimed at making Colombo a strategic shipping hub along the world's most lucrative trading route. The talks come at a time when rising wages and a shortage of labor in China are weighing on manufacturers, driving up their costs and pushing them to look elsewhere to relocate their production lines. Operating costs, including wages, rent, and utilities of running a garment factory in Sri Lanka, run about $1 an hour, about half of what they are in China. The unit cost in Sri Lanka is on a par with that in India, but a little lower than costs in Vietnam and Indonesia. Sri Lankan exports to China have a lot of room to grow since China is currently ranked just 16th among the country's export destinations. On the other hand, China has become the country's second largest source of imports right after India. The top 5 Sri Lankan imports into China are natural fibers, tea, rubber, ores, textiles, and garments. Sri Lanka's central bank governor Ajith Nivard Cabral says it is still too early to say if China will surpass India to become Sri Lanka's biggest trading partner following the agreement, but added such a deal would have a significant impact on the two countries' trade relations. China already gives tax-free treatment to garment products from Bangladesh, Indonesia, and Vietnam. Beijing has been working to reinforce and boost its trade ties with other Asian countries in the region. Besides the China-ASEAN Free Trade Agreement, China has established free trade relations with Singapore and Pakistan. China's Ministry of Commerce says it is studying the possibility of a regional trade agreement with India as well. You're watching Biz Wire on the Blue Ocean Network. All of our stories can be seen on our website, BON.TV/biz-wire. In just a second, we'll continue with more insight into the big picture of China's economy.